This is the video demonstration on closing entries. And in this video, I'm going to be working the solution to example number 3. Now, example number 3 involves the Carter Company. And they've provided us with an adjusted trial balance that is dated December 31st, 2013. And if you look at the requirements, we are simply required to prepare the closing journal entries. Well, we talked about the closing entries in a video lecture, and you realize that there are 4 types of temporary accounts, and as a result there are 4 closing entries. So we're going to do those journal entries based upon information that's included in this particular trial balance. Now, before I even begin to do that, though, it's a good idea to go ahead and familiarize yourself with the trial balance itself and look at all the accounts. Because by doing that in advance, it will make this problem a little bit easier because you'll already be somewhat familiar with the types of accounts that this particular company has. So looking at this trial balance, I see many assets: cash, office supplies, prepaid insurance, and equipment. Then I see the contra asset of accumulated depreciation on the equipment. Then I see 2 liabilities: the accounts payable and the wages payable. Of course, assets and liabilities, those are all permanent accounts, so I really don't have to worry about those in the closing process. Then I have capital. I will be using capital a lot in these journal entries. Then I have withdrawals. Well, we know that withdrawals does have to be closed. It's temporary, so I'll definitely be using that. Then I see an account called repair fees earned. Well, that type of account, that's a revenue account, and revenue also has to be closed. And then I see a whole series of expenses. So by doing this in advance, just gives me an idea of what to look for and just familiarizes me a little bit with this particular company. Now, to do these closing journal entries, I'm going to use Excel, and I already have a journal entry area set up in advance. And of course, you could do this as well, or you could do this on paper. But I'm going to have to do 4 of these closing entries. Now, these are going to be dated December 31st, 2013. And the very first entry that I'm going to do is the entry to close out the revenue. Now, all companies are a little different. Some have more revenue than others. This one only had 1 revenue account, and it was this one right here, repair fees earned. And it had a $80,000 credit balance. So that means this is going to be an $80,000 journal entry. Now, what I want to do is close out revenue, and the way to do that is to take everything out so that the account has a 0 balance. In order to do that, I have to take the opposite action of whatever type of balance it has. So it happens to have a credit balance. So if I want to remove all of that, I'm going to have to debit. So that means that I want to actually debit repair fees earned to close that out. And what do I close that to? I'm going to close that to income summary. So I'll debit repair fees earned $80,000, credit income summary $80,000, and that way it will close out the revenue. So that completes the first of the 4 closing entries. Then the next closing entry, this one is always the one to close out the expenses. Now, when I look at their trial balance, they did have several expenses. They were all down here at the bottom, and there are actually 6 of them, and they have different balances. But what the common element is, look at all the expenses. They all have debit balances. So that means that to close these out, every single one of them is going to have to be credited. So I'm going to debit income summary, but I'm going to credit every single one of those expenses. Now, the first expense that they had was depreciation expense on the equipment, and it had a balance of $4,200. So depreciation expense on equipment, and the balance of that was $4,200. And I'm going to put that as a credit because remember, to close out a debit balance, I have to credit. That'll get rid of the balance. Then they had a wages expense, and it was $36,500. So wages expense, $36,500. And I want that all the way over here on the credit side. Then the third expense, insurance expense, and a balance of $750. So insurance expense, $750. The fourth expense that they had, rent expense, and it had a balance of $8,600. So rent expense, $8,600. Then they had office supplies expense, $2,500. So office supplies expense, $2,500. And then finally, the last expense was utilities expense with a $1,200 balance. So that gives you all of the various expense accounts. Like I said, there were 6 of those. Now that's all on the credit side. So up here on the debit side, I need a debit to income summary, and that's going to be the total of all these expenses. So that's how I'm going to get that total. So that's $53,750. That's the total of every single one of those expenses. And that completes the closing entry for the expense accounts. Now the next closing entry, I'm going to have to close out income summary. Now this one is a little bit tricky because when I look at the adjusted trial balance, remember I've already looked at all these accounts, there's no income summary account on here. And the reason for that is the income summary account is actually never used until you actually get to the closing process. So that's why it doesn't actually appear anywhere on the trial balance. So in order to close it out, I'm actually going to have to look at my 2 journal entries and see how income summary was used, so that way I'll know what kind of a balance it has. So I can see in the first entry we credited income summary for $80,000. Then in the next entry we debited income summary for $53,750. Now, of the 2, there's more on the credit side of it than there is on the debit side. So it's going to have a credit balance. So since it's going to have a credit balance, I'm going to have to close it by debiting. And what do I close that to? Capital. So I will debit income summary and I will credit S. Carter Capital. But I don't know the amount. Well, it's going to be the $80,000 less the $53,750. That leaves me with $26,250. So $26,250 will be the amount that I'll use for that closing entry. And then I just have one more, and that's going to be the entry to close out the withdrawal account. Now the withdrawals, that is actually right here. S. Carter Withdrawals had a $10,000 balance. So this will be a $10,000 journal entry. Now the withdrawal account, what type of a balance was that $10,000? It was a debit balance. So that means to close out the withdrawals, I will actually have to credit. So I will actually credit S. Carter Withdrawals. And what does that get closed to? It gets closed to capital. So that's going to be the debit. So that completes the 4 closing journal entries. And remember, you always do revenue first, then expenses, then income summary, then withdrawals. Now when you do the first one on the revenue, like I said, this particular company only had the one type of revenue, which was repair fees earned, so that was pretty easy. But of course, you know, if you have to do this on homework or something like that, it's possible that the company might have more than one revenue, but if they do, you would close out all of them. And then down here on the expenses, they happen to have 6 of them. That could be a little different as well. Some companies have more expenses, some have fewer, so that could be a little different. And then down here, like I said, this was a tough one because I didn't know what kind of a balance income summary had. But to figure that out, I just look back at my first 2 entries, and then I just close out the withdrawal account. So that completes the example number 3, and that completes the video demo for closing entries.